Hi, welcome to my channel. This is Kauserwise and this is the continuation video of Depreciation Accounting. Please check the description box to get the link for the entire collection. Now in this video we are going to see methods of recording depreciation. In that we are going to see two different methods. Number one, provision for depreciation account is not maintained and provision for depreciation account is maintained. So we are going to see one by one. Now let's get into the video. See the problem. ABC Company Limited purchased on 1st January 2015 a machine for rupees 1,20,000. On 1st July 2015, it purchased another machine costing 60,000. On 1st July 2016, the machine purchased on 1st January 2015, that is the first machinery, having become obsolete, was sold off for 45,000. On 1st July 2017, a new machine was purchased for 1,30,000 and the machine purchased on 1st July 2015, that is second machine, was sold at rupees 48,000 on the same date. Depreciation is to be provided at 10% per annum under written down value method every year, assuming that the accounts are closed on 31st December every year. You are required to prepare machinery account and machinery disposal account when provision for depreciation account is not maintained, and second case when provision for depreciation account is maintained. Okay, so with this information they're asking you to prepare machinery account and machinery disposal account when provision for depreciation account is not maintained and second one maintained. Okay, now let's see the solution for the first one, that is provision for depreciation account is not maintained. Now let's see the solution. According to this problem, we need to prepare machinery account and machinery disposal account separately. So first we are going to prepare machinery account when provision for depreciation account is not maintained. Okay, debit side, credit side. See the problem. ABC Company Limited purchased on 1st January 2015 a machine for rupees 1,20,000. In the same year, on 1st July 2015, it purchased another machine costing 60,000. Okay, so in the same year, they have purchased two different machines. Okay, make the entry in the machinery account. First one, on 1st January 2015 to bank. This is for the first machinery. How much? 1,20,000. In the same year, they have purchased another machinery on 1st July 2015 to bank. How much? 60,000. 60,000. Okay. Now, at the end of the first year, we need to calculate depreciation. So, what is the entry for depreciation? Depreciation account debit to asset account. Okay. So, 31st December 2015 by depreciation. Okay, you can show the calculation separately in the inner column for each and every machine separately. For the first machine, 1,20,000 into, see the problem, how much depreciation? Depreciation is to be provided at 10% per annum under WDV method. Okay, so first year 10%. For the first machinery purchased on 1st January, no. For that, you have to calculate depreciation for the full year. So, how much? 1,20,000 into 10%, 12,000. Whereas, second machinery purchased on 1st July 2015. So, from this date to this date, how many months? July, August, September, October, November, December. Only 6 months. So, you have to calculate depreciation only for 6 months. 10% into 6 by 12. How much? 3,000. So total 15,000 depreciation. That's all. Now you can get the total. 1,20,000 plus 60,000, 1,80,000. Enter the same value here. 1,80,000 minus 15,000, balance 165. This is the closing balance for the current year. In the same day, by balance, carry down, and this will be the opening balance for the next year. That is on 1/1/2016 to balance brought down 1,65,000. Okay, now see the problem. On 1st July 2016, that is in the second year, the machine purchased on 1st January 2015, that is the first machine, 1,20,000 worth machine, okay, have become obsolete, was sold off for 45,000. Okay, now we need to show working note, that is calculation of book value of asset as on the date of sale. Okay, see the calculation. See the working note for calculation of book value of machinery sold. Okay. The first one, cost of machinery on 1/1/2015, how much? 1,20,000. And first year depreciation already we have charged 12,000. Balance 1,08,000. That is the WDV on 1/1/2016. Again in the second year we need to calculate depreciation. See the problem. On 1st July 2016, the machine purchased on 1/1/2015, having become obsolete, was sold off for 45,000. Okay, so we need to calculate depreciation even for 2016, but till 1st July. See the working note. Second year we have to charge depreciation only for 6 months. That is on 1st July 2016 till this date. How much? 1,08,000 into 10 percentage into 6 by 12. You'll be getting 5,400. So balancing figure 1,02,600. This is returned on value on 1/7/2016 on the date of sale of machinery. Okay, now see the solution. See the solution. As per working note 1, we have calculated value of machinery as on the date of sale. How much? 1,02,600, and this will be transferred to machinery disposal account. Okay, in the machinery account, we have to transfer this amount to machinery disposal account. We didn't record the sale value and we didn't calculate any profit on sale or loss on sale. Okay, since we have not maintaining provision for depreciation account, we need to only record the value of machinery as on the date of sale transferred to machinery disposal account. In the machinery disposal account will record the profit or loss on sale of asset. Okay, now at the end of the year we have to calculate total depreciation for the rest of the machine as well as the sold machine depreciation. Okay, on 31st December 2016 by depreciation. Okay, for the first machine which we have sold, okay, for 6 months only you have to calculate depreciation. So 1,20,000 minus 12,000, 1,08,000 into 10 percentage into 6 by 12, which we have done in the previous working note calculation. Okay, how much? 5,400. So this is the depreciation for the machine which we are going to sell. The second one, the another machine 60,000, no, 60,000 minus 3,000, balance 57,000. 57,000 into 10 percentage. So now we have this machine only. For that we have to calculate depreciation for the full year. 5,700. So total depreciation 11,100. That's all. Now get the total. 1,65,000. 1,65,000. Balancing figure 51,300. On the same day, by balance carry down. Say 51,300. This is the closing balance. By balance carry down, and this will be the opening balance for the next year. 1/1/2017 to balance brought down 51,300. Okay. See, so far we have calculated machinery amount as on the date of sale. That value we have transferred to machinery disposal account. Okay, we didn't calculate profit on sale or loss on sale. Even we didn't enter the sale value of asset. Okay, so we have just calculated the machinery value as on the date of sale based on the calculation. Okay, and we have transferred the entire amount to machinery disposal account. In that machinery disposal account, we will record the sale value, and there we will calculate the profit or loss on sale of asset. Okay, so here just transfer that amount to disposal account. That's all. And end of the year, we have calculated depreciation for the sold asset as well as the remaining asset. Okay, now this is the closing balance transferred to next year. Okay, now see the problem. On 1st July 2017, a new machine was purchased for 1,30,000, and the machine purchased on 1st July 2015, that is a second machine costing 60,000, was sold at 48,000 on the same day. Same day means on 1st July 2017, we have purchased another machinery. On the same day, we have sold second machinery for 48,000. Okay, now see the solution. We have entered the transaction, that is on 1st July 2017, we have purchased another machinery for 1,30,000. Entry machinery account debit to bank account 1,30,000. Okay, on the same day, they have sold second machinery for 48,000. Again, you have to do the working note to find out the machine value as on the date of sale, and that amount will be transferred to machinery disposal account. See the second working note, calculation of book value of machinery sold. Okay, so this is the calculation to find out the book value of machinery as on the date of sale. Okay, so cost of machinery on the date of purchase 1/7/2015. How much? 60,000 given in the problem. So first year we have calculated depreciation only for 6 months. From 1st July to 31st December, how many months? 6 months. So how much? 3,000. And this is the WDV value after first year depreciation. Again, second year we have to calculate depreciation. 57,000 into 10% for the full year, 5,700. And this is the WDV value after charging depreciation for the second year, 51,300. And in the year 2017, that is on 1st July 2017 till this date, how many months? Only 6 months calculation, 6 months depreciation. 51,300 into 10 percentage into 6 by 12, how much? 2,565. After subtracting this depreciation, the remaining value is 48,735. This is the written down value on 1st July 2017 as on the date of sales, and this value will be transferred to machinery disposal account. See the solution. In machinery account credit side, 1/7/2017 by machinery disposal account. So refer working note number 2. How much? 48,735. Okay, now at the end of the year, again we have to calculate depreciation for the rest of the asset as well as the asset which we have sold. Okay, on 31st December 17 by depreciation. Okay, so now we have one machine, that is 1,30,000. For that, you can calculate finally, and you have to calculate depreciation for the asset which we have sold, which we have transferred to disposal account. So, what is the value of the asset? Look at the second machine value, 60,000. First year we have charged depreciation for 6 months, 3,000. No, 60 minus 3, 57,000. And second year we have charged depreciation 5,700. So 57,000 minus 5,700. What is the value? 51,300 into 10 percentage. And this year you have to calculate depreciation till date of sale of that particular asset. Okay, so 6 months only. 2,565. Now we have only one machine, 1,30,000. That too we purchased in the same year on 1st July. From this date to this date, how many months? 6 months. 1,30,000 into 10 percentage into 6 by 12. 6,500. That's all. Total depreciation 9,065. Now you will be getting the balancing figure. Debit side 1,30,000 plus 51,300, 1,81,300. 1,81,300. Okay, balancing figure how much? 1,23,500. On the same day, by balance, carry down and this will be the opening balance for the next year. On 1/1/2018, to balance brought down 1,23,500. Okay. So as per the problem, we have made machinery account and we have entered all the transaction in this account. Okay. Now we need to prepare machinery disposal account to record two transactions. The first machinery sold on 1st July 2016 and the second one sold on 1st July 2017. Okay, so we need to record this transaction in the machinery disposal account. Now let's see the account. See the machinery disposal account. We have entered on 1st July 2016 on the date of sale to machinery account. The value of the machinery disposed how much? 1,02,600. Okay. See the machinery account. So how much value on the date of disposal? 1,02,600. No. Machinery disposal account debit to machinery account. Okay. So in the disposal account we have entered machinery. How much? 1,02,600. See, in the disposal account, we have entered 1,02,600. Now, on the same day, we have sold for how much? 45,000. Entry bank account debit to machinery disposal account. See the problem? See the problem? The machinery sold for rupees 45,000. The first machinery sold off for 45,000. So, we have entered in the disposal account by bank 45,000. That's all. At the end of the year, just find out the difference. How much? Debit side we have 1,02,600 value of machinery as on the date of sale but sold for 45,000. So what is the difference? 57,600. This is loss. This loss transferred to profit and loss account. Within the bracket you can mention loss on sale. Okay, 57,600. That's all. In the same way, we have to enter for the sale of second machinery. See the problem? The second machinery sold on 1st July 2017 for rupees 48,000. Okay, what is the value of the machinery as on the date of sale? See the machinery account on 1st July 2017 by machinery disposal account how much? 48,735. So this will be transferred to machinery disposal account. See the machinery disposal account on 1st July 17 to machinery account 48,735. This is the value of machinery as on the date of disposal but sold for 48,000, right? So what is the entry? Bank account debit to machinery disposal account on the same day 48,000. Actual value of the machine 48,735 but sold for 48,000. What is the difference? 735. So this is loss. This will be transferred to profit and loss account at the end of the year. That is on 31st December 17. That's all. So this is the way to prepare machinery account and machinery disposal account when provision for depreciation is not maintained. In the next video, we are going to see when provision for depreciation account is maintained. Please check the description box to get the playlist link. Hope you like this video. Please hit the like, comment, subscribe and share with your friends. Thank you.